Good afternoon, everyone. So welcome to the next lecture, ABC. So now, before we start this lecture, so first of all, you need to understand something. Any product or service, has three types of costs. Consists of three types of costs, and we did it in lecture 1. Direct material, direct labor. These are classified as a variable cost, direct cost, and the cost per unit is you can identify it. And we have also the manufacturing overhead. The overhead cost is indirect cost. Fixed cost is indirect cost. Now, when it comes to variable cost, the material and labor, we have no issues here. Absolutely, we have no issues. We know how much material costs this unit, how much labor. It's easy. There's no issues here. But our problem comes with the manufacturing overhead, the indirect cost, because it's difficult to trace and absorb the overhead into units. It's difficult. You just can't do this. Okay? So, in this case, think about it now. If you talk about, if you go to Tesco and you bought, let's say, 5 bananas, 5 apples, 5 carrots, 5 oranges. You went to the till and you paid £20 and you left Tesco, right? So now if I ask you this question now, how much did you pay for each unit? You will tell me straight away, I'm sure, okay, £20 divided by 20 units equal £1 per unit. And you are confident to say this, isn't it? So this is wrong, isn't it? Do you know why? Because you've got 4 products. How can you divide it? This is not right, isn't it? This is not right. If it was only one product, yes, you could divide it by 20. That's fine, so £1 each, but you can't divide it because the price of bananas is different from the price of apples, different from the price of carrots, different from the price of oranges. You can't do it. The same with the business. When they pay, for instance, rent a day, £1,000 a day, and they make hundreds of units every day. And these units have different costs, different prices, different time of process. Can you imagine? So you can't just simply say, okay, £1,000 rent divided by 1,000 units a day. Here we go, £1. So we absorb it into each unit. This is not working like this. So, first of all, before we start doing ABC, we have 2 costing techniques. We did absorption costing. I'm gonna revise now, do one example, and then we'll come to ABC. Right, we'll come to ABC. Now let's do let's do this example. Sorry guys, if you are hungry. Right, okay, let's do this example then. For traditional costing technique. Okay. Okay, look at this question, guys. Okay, this is lecture example. Question number 1. KitKat chocolate manufacturer, they have 3 products here. They have what? 3 products here. They have sky and the moon and the sun. Can you imagine? Sky, blue sky, moon, clear moon, and the sun. This is exactly the UK, isn't it? That's exactly the UK. Clear sky, blue sky, lovely moon every night, and the sun is 24 hours 7. Amazing. Right. So now think about these 3 products right now. Yeah. Think about these 3 products right now. You've got here direct material cost per unit, direct labor cost per unit. Can you see for each? You have also the actual unit sales, actual production units, sales units. They are equal. There is no closing inventory. Amazing. You have direct labor hours per unit, labor hour per unit. You have direct machine hour per unit, and at the end you've got here the selling price per unit. The selling price per unit. Here you've got the fixed cost on, or the annual production overhead. The annual production overhead, when I say production overhead, I mean anything related to production overhead, indirect cost, overheads related to the production of the product. It's such as salaries, rent, etc., etc. That's all to do with overheads, and this is our issue here. So now if you look here, we don't have any problem, guys. Here look, we have no issues here with direct labor cost per unit, with direct machine cost per unit, material cost per unit. We have no issues here. The question mentioned these, but our issue with the overhead, the £80,000. The question asks you to calculate the full production cost per unit and the profit per unit for each product line. Now think about it. £80,000. This £80,000. How can I absorb it? Okay, into the units, into 500,000 units. How? That's the question. So here in this example, in question number 1, we are using what? We are using traditional absorption costing. Traditional absorption costing. Let's do it. When it comes to traditional absorption costing, the first thing you need to do, you need to calculate something called OAR, which is overhead absorption rate. Overhead absorption rate. When it comes to overhead absorption rate, remember the formula, the production overhead divided by the activity level. When it comes to activity level, so you've got three methods or three things to consider. Number of units, you divide by number of units. 1, 2, number of machine hours. 3, number of labor hours. So now we know the production overhead cost, which is £80,000. It's in the question. We have no issue with this, but our issue is about the activity level. If we start with number of units, would you say number of units is the right one? I would say no. Why no? Because we have more than one product in the question. In this case, straight away you exclude the number of units. Would you say number of machine hours or number of labor hours? Now you need to think logically. Now they are manufacturing chocolate. Do you think in a factory nowadays, yeah, if you go nowadays, do you see more machine hours or more labor hours are used? Of course, you would say straight away is more machine hours. In this case, from this perspective, we are saying, here we go. We are absorbing, we are using the number of machine hours in order to what? In order to absorb the overhead into the units. Here we go. Right? So usually the question will tell you if you are using machine hours or labor hours to absorb. Okay, so here we go. In this case, if you look here, you'll see the £80,000, which is the production overhead divided by number of machine hours. So how can you get number of machine hours? It's very simple. Go back to the question here. Look, here we go. Direct machine hour per unit, we have 0.01. This is the machine hour per unit. Okay, if you multiply it by number of units available for Sky, 500,000 units, so that comes with what's called 5,000 machine hours. 5,000 machine hours. Okay, so you want to do the same. So the same for moon and the same for the sun. Yep. Can you see? So if you add them together, this is 16,000 machine hours. So if you divide £80,000 divided by 16,000 machine hours, it is £5 per machine hour. £5 per machine hour. So it doesn't mean that we pay £5 per machine hour. No, not really. This is the overhead absorption rate. We use it. We use £5 in order to absorb. We'll look at it in a bit. So now let's come to the cost. In order to calculate the cost per unit, as you see here, you need to include the cost per unit, which is, first you need to include the variable cost per unit, including the labor cost per unit and the material cost per unit. And again, I did say this, we have no issues really. It's there, you just copy paste from the question, yeah? Now our problem, our issue, all about the techniques, the costing techniques is about the overhead. This is about the overhead. And how can you calculate the overhead per unit? Very simple, you already done the OER, isn't it? Can you see here? £5. So what you need to do, only you calculate and multiply the OER, £5, you multiply it by the direct machine hour per unit here. Look, 0.015 times 0.01 equal 0.05. Same with the moon and same with the moon and same with the sun. So if you add them up, the variable cost, material and labor, and you add the production overhead per unit, so this is a 29 pence, which is the full production cost per unit. Here we go. So we have the 29 pence, the full production cost per unit. So if you, in order to calculate the profit per unit, what you need to do, you need to take away the selling price per unit, which is 50 pence. So here we go. This is the selling price per unit, 50 pence. If you take away the 29 pence from here, you should be able to find the profit per unit, which is a 21 pence. 21 pence. Okay. Right, guys, this is the way how we calculate the sky. Of course, this is the same procedures we are doing the moon and the sun. It's absolutely the same. It's absolutely the same. So now, if you look at the results as a management accountant or financial controller, if you look at the results, so what do you think? What's your comment? So of course you will comment that that the moon is, we are making a loss per unit 8 pence, isn't it? So you've got the three solutions to put on the table. And the first one is, of course, you increase the selling price. The second, you decrease the cost. And the third one, on the last one, you could drop the production line. So these are three possible. You could have another solution. It depends on the business, depends on the line, it depends on the results. But these are three possible solutions. As a management accountant or financial controller, you could put them on the table. Right. So again, guys, this is a traditional costing technique, how we calculate the cost per unit using traditional absorption costing technique, using labor hours or machine hours. And this is the way how we do it. Hopefully it's clear and it's straightforward really. Now, what we need to do right now, we need to jump into ABC. Okay? Okie dokie. Okay, here we go. Right. So remember that the absorption costing is an unsophisticated method to allocate the overheads, and the ABC is considered to be the sophisticated method to allocate the overheads. So ABC came after absorption costing to address the issues of absorption costing. So remember, ABC is the sophisticated method here for the businesses. Look at the how manufacturing has changed from years ago. I don't know, 1950 or 60, I have no idea. from automation block. Yeah. So this is trying to tell you that the business becomes more complex. Yeah, becomes more complex. Yeah, because years ago they used to rely on labor, mainly the overhead. The main overhead would be the labor cost, but no more. Here it jumped, and now the overhead includes a lot of costs, including the automation, the machine costs, etc. So the overhead becomes consists of large portion of cost, of total cost. So why do we need really ABC? Let's look. Okay, we need ABC. ABC is very important, and we need it as alternative method of absorption overhead for specific reasons. And the first one, when it comes to absorption costing usually is suitable for business has a small portion of overhead cost. Small portion of overhead cost. Yeah, and that's suitable more for them. But when it comes to ABC, so ABC is important or is vital for business which has more overheads, huge number of overheads, okay, and also the business has a lot of diversity in the products, larger production there, so they have a lot of product diversity in the products. And also why is ABC important here? Because it's the environment becomes more complex, the market becomes more competitive, so they need a way or they need a method to apply in order to give the right cost or the accurate cost per unit again and again. So ABC is the one which we need to use and rely when it comes to complex business, diversity, a lot of diversity, various products, and huge overhead cost. Right. So this is the difference between which I did explain just now. Okay. Right. When it comes to traditional absorption costing, right, remember these are the overheads. If you look at the slides here, you see production setup cost, machine oil, and supervisor salary, and machine repairs. For these overheads, we absorb them in one department, for example, department A, and we find only one OER for them, for example, using machine hours. So we use machine hours in order to absorb them into units. Can you see? We only use one OER. However, with ABC is different. The situation is different. Look here, it's very important. So every single cost or overhead cost, for example, production setup cost, production setup of machine oil and machine repairs, supervisor salary. Yeah, these are overhead costs. These are overhead costs. These are classified as activities. Every single activity under ABC has one cost driver, and every single cost driver has one OER. Can you see how much is accurate is breaking down the cost? And instead of having one OER for all of these, we have one OER for each activity. So cost driver means what caused it really. The cost of overheads. The cost of production setup cost is the number of production setups. Machine oil cost, number of machine hours. And the supervisor salary, the driver, is what? Is the number of labor hours. Can you see now? Now you start feeling that what? That ABC just try to break down the cost and make it more what? Accurate. It try to link, to relate to what caused this cost. Yeah? What caused this cost? If we don't have packaging cost, why we should include the if we don't have packaging or a number of customer orders, why we should have include packaging cost, for instance. Okay, Okie dokie, outline of ABC, that's exactly what I just explained. Drivers, activities, that's great. And now steps for ABC, here we go. Now the steps for ABC, we have 5 steps. We have 5 steps to consider when it comes to ABC. These 5 steps, we will apply them in lecture example 2 and you will get them right.